To some degree, this final session is a precursor for what we're going to try and do this afternoon. So we're going to spotlight fund managers and project developers who successfully closed funding rounds. And we want to learn from them what have been the steps towards that success. We're bringing to you really concrete examples now, so we'd love to get real questions from you. So do, as you sit and you listen to these examples, please give some thought to the questions you'd like to ask, because we're going to nudge you to engage with the really exciting examples that we have to share up on the stage now. So please join me now on the stage, Leonardo Fleck, who's the Senior Head of Sustainable Innovation at Santander, José Pugas, who's Founding Partner and Chief Sustainability Officer at Régia Capital, Peter Fernandez, CEO of Mombak, Pedro Faria, Co-CEO and Chief Investment Officer at Patria, and Mario Lewandowski, Partner at AGBI. Welcome.
I'm going to speak in English. Maybe that helps, but feel free to speak in Portuguese if you prefer. I would like to start first saying how privileged we are all to be here together. We have here probably the main players in the ecosystem that is actually building a new industry, a new sector in Brazil. So you should all be extremely proud of the work that you have been doing, because this is not just talent. There's a lot of other competencies that people who work in this space need to present, because this is not an easy task. This is really, really hard work. So I commend everybody for all that we have heard so far. This is so important because this is not just as a climate solution. We know that nature-based solutions, they are probably one of the most important solutions because they bring benefits for climate, they bring benefits for nature, for biodiversity, and also for inclusive rural development, which is something that we also need to address, right? So it's a really sweet set of solutions and that are not quite easy to implement. And we have heard over the day that is a lot happening, and that is really great news. But still, it's an incomplete market. That's how economists call markets that are still emerging. And incomplete markets, they can be quite noisy, right? The demand is not clear, the demand signal is not clear, the supply sometimes is fragmented and confusing, the infrastructure is not there yet. So it really requires people with vision and with courage to actually learn how to navigate those markets and figure out a way of succeeding early on. I want also to compliment Tony and the team of Capital for Climate for building this infrastructure for the market, which I think is really critical. I have known Tony for the last 3 years and have supported the Alliance for the last couple of years, and I have seen all the evolution that we have achieved over this year. So it's really important for an emerging market to have this type of structure, connecting the developers, connecting the investors, building visibility and also credibility in the ecosystem. So without further ado, I'm very excited to have this panel here, because these are probably the prime examples of entrepreneurs and fund managers who have learned how to navigate this space very early on, and not just transformed ideas, bold ideas into reality, but also they have been able to achieve important financing milestones. So they have been able to convince financiers, investors of their thesis, even with all that uncertainty in the market. I think the key point here is that the perfect is the enemy of the good, right? So we'll never have all the perfect conditions, and we really need more examples like these ones that we are going to see now to continue to help build trust with investors, with financiers, with the government, also to create more enabling policies to support these initiatives. We are going to go over each one of the presenters with 4 questions. We want to learn about what is the fund and vehicle that they have put together, what are the key capital formation milestones that they have achieved so far, what are the key success factors that allow them to achieve those key capital formation milestones, and finally, whether there are any outstanding concerns that they have heard from financiers and investors that may need to be addressed for them to further scale their capital mobilization. I will start with Mario. I know Mario for a few years, right, Mario? And Mario actually focuses on something that is very interesting, which is pasture degradation. I think fortunately, Mario, you have now EcoInvest, you know, the line that we have heard before, exactly focusing on that thesis. Brazil has more than 100 million hectares of degraded pasture, so this land that can be used for better production or restoration, so there's tremendous opportunity, but it's also not very easy to do that. So tell us about your opportunity.
Well, not very easy is an understatement. I'll try to go very quickly. I got a couple slides here just to help fixate a couple of numbers. We've been working with land restoration for the last 12 years. We are actually right now putting together our 4th fund. We have 2 funds that have been divested. Our 3rd fund has already acquired 2 farms. They've been transforming, and we're actually selling those farms. The transformation is almost concluded. And we're setting up a 700 million real fund, which should be launched in the next couple of months. If you can go ahead and just hop to the next slide, please. Very quickly mentioning, this is the first farm we worked with. We acquired it for 39 million reais in 2013. This was actually a club deal, family and friends. We sold it for 177 million reais 8 years later. This is the sort of stuff that makes you the most popular person in New Year's table. We transformed from degraded pasture land into crop rotations, integrated systems, IFLP. In this case in particular, it's an integration of soybean, corn. There was some cattle on it as well as some foraging species like Crotolaria. The next slide is the main farm on our fund number 2. 28 million on the way in, 146 million on the way out. If you can go back to the last slide just to show what degraded, no, the one after that, bingo. Nope, one before. When we say degraded land, what? It's okay. If you guys want to have a better look at what degraded land is, we're going to be on the pitching sessions, and we'll be explaining our nature-based solution fund, which we're launching. Degraded land, just go ahead to the table. That'll be fine. Degraded land is not grasslands. We're not talking about the prairie. We're talking about a land that wasn't originally for cattle. People forget, but maybe the largest invasive species in Brazil is cattle, if not the feed. So if that's poorly managed, the land will degrade. That has happened to over 100 million hectares in Brazil. 80 of those have agricultural potential. 40 of those have high agricultural potential, which means a little bit of good management and healthy soil tending. You'll increase soil carbon content. You'll increase capabilities. The next slide, and that'll be the last one. Thank you. That's easier. So we've actually been getting returns around 20% in reais. In dollars, that has been, first fund was 5.8% IRR, second fund was 8.7% IRR. Bear in mind that in the last 12 years, the real lost 80% of its value. It's a very good investment because when you talk about agriculture in Brazil, sustainability is intimately connected to agriculture, because if the soil is healthier, you'll produce more. If you look for bad soil and you transform it, you get a double whammy. But we've been moving forward. First couple of funds, we raised relatively little, around 30, 40 million reais. Third fund is 125 million. And the 4th fund, which we'll be launching this second semester, is probably going to reach 700 million reais, if not more. Our pipeline actually goes way beyond that. 13 million hectares mapped out all over Brazil, about 1,300 properties. We've been looking for farms every single day since 2012. We've been filtering them out. Doesn't mean that all of them are good farms to transform. Doesn't mean they're all degraded land. When we look at what we're targeting, we get 0.4% of that pipeline, but 6 farms in Brazil is plenty. It's more than enough for you to invest 150 million reais. As I said, we'll go in deeper on the nature-based solution strategies on the pitching sessions. Over here, I think we're talking about our history and the way back. This is a little bit what we've done.
Thank you very much, Mario. I will switch now to José Pugas. I also have known Pugas for a while. Pugas has, aside of his job, his formal job, he has been a real advocate for this sector in Brazil for years, traveling all over the world, selling Brazil NBS in multiple fora, which is really a tremendous job. And I know you have put a lot of effort to do that, to build trust with foreign investors that Brazil has opportunity here. So thanks for doing that, Pugas. And recently, of course, launched Régia Capital, which I think is a unique innovation in Brazil, a combination a partnership between JGP and Banco do Brasil, which I think augmented significantly the capacity that you guys had to originate and to invest on these types of transactions. So tell us a little more about that.
Sure, it would be a pleasure. And thank you for inviting me. It's always good to be among friends. And that's what you are for me, friends. At least brotherly in arms, because we are in the same battle. So thanks for being here. Well, Régia, as was told, it was a joint venture between Banco do Brasil. Everyone knows Banco do Brasil for sure. I hope you are all clients, even you. So, and JGP Asset Management. So, we are a child of two giants. What created us, we are almost an Apple baby. Let's be quite sincere here. So, we are lucky to be among two of the most effective financial players in Brazil. And but even those two understood that when we talk about sustainable investments, we need something else. It's not just a simple asset management. We need to take a step further. That's Régia Capital. Régia Capital is a capital solution provider, more than just an asset manager. And why it's important for us to talk about that? Because currently we are on our first anniversary. We just completed 1 year old. So we are a huge baby. With almost $2.5 billion in assets under management, fully mobilized on this last year, on this first year, and domestically. We're not talking about international investors. We're talking about domestic. So we have a lot of power here in Brazil to mobilize such capital. And until the end of the year, sorry people, probably 1 billion more will come. And we want to more than double the next one. It is the size of the potential of Brazil. But for us, it's a question of being in the right place in the right time. In Brazil, it's in the right place in the right time. We're just surfing the hype. We're surfing the trend here. And for us specifically, how we can transform this moment, this zeitgeist, into real results. First of all, we need to build trust. In our line of business, trust is the most valuable currency. And in order to provide trust, we need to provide trust not just among our investors, but mostly on our investees. Most of the times we forget that. We call our investors clients and forget that our investees are clients as well. When a company says that doesn't have a pipeline, well, we are not talking to the real economy. There's plenty of pipeline here. I see a lot of you as a pipeline for investments. But most of the times, we at the financial sectors were not ready to invest in you. And that's our fault, not yours. So, at Régia Capital, we are committed to accelerate those potential investments into actual investments. And that's how we were able to not just mobilize that much capital, but also to deploy that much capital. Because you opened your doors for us to help you to accelerate and create wonderful investment opportunities. Like you are. I see someone that I want to invest as well. So right here, when we're talking about Régia Capital, and one of the questions was what makes us so effective on deploying capital and mobilizing capital, one point that was extremely critical for us is that we decided to go screen mode off. We decided to stop picking and selecting, and we start going to the real field, talking to people, talking to companies, and looking at those companies and those projects' potential investments. To invest in nature-based solutions, you will not find that on a terminal, on a public terminal like Bloomberg and say, okay, I want to invest on that, I don't want to invest on that. It's much beyond that. So we're talking about pre-competitive industries. Other point that for us was very essential, and I don't want to stay for longer than the hospitality allowed me, is that most of the time the financial structures, they do not operate on those new economies. What we were learned to do and apply for the last decades, it doesn't work right now for the pre-competitive industries. So we must adapt blended finance and another architectures as our mainstream strategy, not just as a fringe strategy. Right now we have over 10 funds under our management. Until the end of the year, poor Luis, who is structuring those funds, it will be 10 more. And most of them are under structured debt in blended finance structures. And when we talk about blended finance, and I'm going to an end here, the challenge is not technical, it's diplomacy, it's diplomatic challenge. How you can put different people, different institutions in the same table with different intentions, and sometimes some of them may hate each other. It's true. To cooperate, to work together. This diplomatic skill must be a part, an essential part of what we do. So to all of us, Faria Limers, understand that technicalities is just that, technicalities. What really change everything is people, is soft skill. And I'm proud to have the best people for me. They are the ones who is really driving change. I'm just a lucky guy leading that. Next one.
Thank you very much, José. Peter, moving to Mombak, we are great partners. We have worked with Mombak. Mombak has been one of the most, in my opinion, most sophisticated startups in the restoration space in raising capital, right? You have actually achieved great achievements on that space, bringing capital from outside Brazil. So tell us a little more about how you have been tackling that challenge.
Thank you, Leo. Hello, everybody. Thank you for your time. So we're Mombak. Our thesis is that Brazil is going to be the Saudi Arabia of carbon removal, and we are trying to turn Mombak into the Saudi Aramco of carbon removal. The way we do that is that we buy land and we reforest it with native biodiverse forests, and then we monetize through the sale of high quality carbon removal credits. We're a carbon pure play. We do not also sell wood or agricultural products. We're focused exclusively on carbon, and we're fully vertically integrated. That means that we do everything ourselves, from the finding and the buying of the land all the way to the ultimate sale of the carbon credit. We do industrial scale reforestation. What that means is that we're not doing old school NGO style reforestation. We're doing very efficient and productive reforestation. Our sites look exactly like a Suzano or a Bracel eucalyptus site, except they're planting native biodiverse forests. Our sea levels are all actually from places like Bracel and Suzano. We think we're trying to create a new industry here. Carbon removal has the potential to be a $1 trillion a year market. That would make it Brazil's third largest export market, only after petroleum and mining. It would be a bigger market than beef, a bigger market than cellulose, a bigger market than soy, all of which Brazil is the world's largest exporter. So we're talking about a huge opportunity here to build a new industry. So far, we've raised around $300 million. In order to fund our projects, we became a fund manager. We had no ability to raise that kind of money onto our own balance sheet. So we created a series of funds called the Amazon Reforestation Fund. Today, we've raised around $300 million from some of the world's largest and most sophisticated investors like AXA, the Canadian Pension Plan, Bain Capital. That figure includes about $100 million worth of debt, including from the World Bank, including from BNDES in partnership with Santander. Thank you, Leo. And we are now owners of around 20,000 hectares of land in the Amazon, which is roughly 3 times the size of Manhattan. And we're currently planting around 1 tree per second. So we've managed to reach a decent level of scale. And this year, we're going back for another $300 million vehicle. We're currently raising it. We expect to be oversubscribed and to close that by the end of this year. The main success factor in raising that amount, by the end of the year, in addition to the next $300 million, we intend to do another $200 million in debt. So we'll get to around $700 million total raised by the end of this year. The main success factor has been offtakes properly priced. So an offtake agreement makes it really easy to invest, right? Because it's guaranteed revenue. When I say properly priced, here's what I mean. The first thing is capital for what we do is not cheap. Our investors expect high teens returns in dollars, and that is what we deliver. At least we do not have access to lower cost capital than that. And it kind of makes sense, right? A lot of investors that we talk to say things like, look, I could put my money into mezzanine credit and get 12%. What you do sounds a lot riskier. And they're right? We have to deliver high returns. On top of that, reforestation is really insanely expensive. It's so capital intensive. It is not a cheap thing to do. And to deliver high quality carbon removal credits is expensive. It is expensive to guarantee high additionality. It is expensive to guarantee high durability. It is expensive to get rid of leakage. You can't do those things cheaply. So we have to charge the correct price for our ton of CO2. Our ton of CO2 is priced much closer to $100 per ton than to $50 per ton. And there is demand in the market for those prices when you deliver the highest possible quality. For a buyer, high quality means low risk. High quality means low reputational risk. I'm not going to turn up in the New York Times in 2 weeks saying that I bought from a fraudulent project or a project that is doing shady things or a project that isn't really additional or has, unacceptable leakage, right? And low risk also means low delivery risk. It means the company's not going to go out of business in the next 2 to 3 weeks or 2 to 3 months or 2 to 3 years and not deliver my carbon removal credits. The vast majority of carbon removal companies today are just startups, and 90% of startups go bankrupt. This is why we've structured ourselves off balance sheet. We don't actually own our projects. AXA owns our projects. Canadian Pension Plan, Bain Capital own our projects. This type of capital structure and this type of focus on quality allows you to charge the correct true price of a carbon credit, which is much closer to 100 than it is to 50, and there is a market for that when you achieve that level of quality. So I'm worried that there are a lot of developers out there selling at a loss, and that's going to be bad for the market. I think the whole market is mispriced. When we charge the correct price, we deliver the returns that are required to raise the amount of money that is necessary.
Thank you, Peter. Congrats for all the work. Moving to Pedro from Patria. I don't know if everybody knows who Patria is, especially from outside Brazil, but it's a very well-established asset manager in the country. And I was very excited when I saw that you decided to launch a fund dedicated to NBS, given that you have exposures to so many sectors, you have so many opportunities for investing. So tell us more about your decision to come into this space, please.
No, thank you for being here. Again, thanks, Tony Land, Vivi. You've been extremely helpful in reaching, for us, a significant milestone and reaching to a first closing. The angle I try to explore is more how do we convince a multi-strategy manager like Patria to venture into a new area. There's 37 years of reputational risk at stake. Patria itself, the number shows 46, is currently a $48 billion asset management, scattered all around LATAM and now venturing to the global north, UK, US, etc. It defines itself around 6 different verticals or strategies. So what with the team, we decided to do is to launch yet a new vertical. So that's, to be very honest, uphill struggle, right? And I like when Marina said, okay, I like to see some mainstream logos here. I say, yeah, it took a lot of effort to bring a mainstream logo here and a lot of internal convincing. But overall, I'm happy to say there's an overwhelming support within the firm. There is something we're doing which is attaching to the core values and principles of the partners themselves. We have money from the partners believing in this and giving us a lot of autonomy to pursue that strategy. And the way we frame it is really, this is just the beginning. We don't know what we don't know. So I think we're taking perhaps what looks as a less ambitious approach, but I think it's a conscious effort. Start, dream big, start small, and move fast. So that's kind of the trilogy here. We narrowed our focus for the first fund in what we're saying a reforest fund, taking more of a blended approach than Peter's. We obviously investigated a lot, and I agree with you. The industry is mispricing risk and potential. So we decided to kind of come closer to, I think, our areas of, let's say, expertise of previous experience. I've been very much involved in the agribusiness. I'm listening to you. I'm saying, you know, by 2005, I was actually IPOing a company to do exactly degraded land and turn it into productive. So we had a bit of experience on that. So right now, we're really trying to, what we're saying, reduce the green premium associated with what we did. I really admire Peter being able to kind of price that green premium. We're taking a little bit more of a hands-on approach, more cautious approach. So we're zooming in on the Atlantic forest biome. It's closer to home. I can drive to the sites. I can meet the people. Something that I completely concur here. We're not going to behave like capital allocators, just saying, okay, this project is great, that project is great. We're basically forming a team. We're hiring from people who have, you know, experience in the pulp and paper industry, who have experience in forestry, etc. And we're also trying to anchor our thesis around resiliency of supply chains, which I think then we're getting the double long-term trend. It's not just about removing carbon and the sustainability and the climate angle. It's also about providing resiliency to supply chains, which are today being threatened by the current climate emergency.
Thank you, Pedro. I think we should not underestimate the importance of having Brazilian local investors also betting on that thesis, because we talk a lot about raising funds from outside Brazil. But you know, if we don't have Brazilians betting on the thesis, it's going to be much harder for us to convince investors from other countries to come along. So, thank you for that. I would like
to. Just to that slide is outdated because now it's not just 6 verticals. There's a 7th one, which is, you know, sustainability investing. Thanks, Tony.
Excellent. I would like to open for questions now. Of course.
I realized I was so time conscious I skipped a maybe important part of what I was speaking. Our fund number 3 is the only SFDR compliant agriculture fund in Brazil at the moment. We usually talk about agriculture because we see as the main core value of what we do, food security and the agricultural business. But that doesn't mean that we're also looking at sustainability. We have soil carbon projects in Vera, and I think this is something that's very important to notice and to mention. A lot of the times when we talk about agriculture in Brazil, people don't realize how sustainable it is, simply because Brazilian farmers aren't the best at compliance. So they won't be doing the reporting. You were talking about Brazilian versus international investors. When we talk to Brazilian investors about sustainability, they're usually looking at where is the financial return, and we're used to speaking to Brazilian investors. So usually we take the agricultural angle. Notwithstanding, it's important to mention that, and this isn't just for me. I know for Pugas it's the same way. When you look at agriculture, sometimes you talk a lot about agriculture and food supply, and we don't underline enough how much it's sustainable.
Great, thank you, Mario. Do we have any questions? Oh.
3 questions.
3. That's great. Please say your name and your organization and to whom you want to make the question, please.
Luana Maia from Nature Finance. I think my question is for Pedro, because you were talking about resilience, and maybe a few of you that could comment on how we can measure resilience and how you're expecting to see resilience in the supply chain. And basically, I want to know how we shift from yield to resilience measurement.
I think this is a great question. I want to invite others to comment on that. But we think resilience, to my mind, is you have multiple dimensions of resilience. Something that we've been extremely focused on is the social aspect of it. So how do you actually ensure permanence? How do you actually ensure durability? You need to have an economic interest that will mobilize society and people around. So that for us has been a very, very relevant focus on the projects we've been looking. And we think a way to get there is not only to prove and validate anchor crops, agriculture being successful and sustainable, but then helping local farmers, partners to the project, to become associated with that. So I was, for instance, very much involved in the protein space, in the poultry space, and I was leading a company which had more than 13,000 outgrowers who have, ensured that through generations they are in the business and they can be there. So I think that's one dimension of sustainability and resilience that we're really focusing. There are obviously the environmental dimensions of resiliency. So our fund is a Chapter 9. We want to be able to set a number of metrics from carbon removals to all other aspects, environmental services that we are kind of baking into the blended outcome we want to achieve. We want to achieve double teen or low teen returns, just like Peter mentioned, but we want to be able to also achieve a number of metrics around environmental and the social aspect is what I think we're trying to become even more focused about.
If I may also comment that, when we start looking at, every time that we do a financial modeling, we work on a stress scenario. If everything fails, is this business model able to support? But most of the times we forget climate resilience, nature resilience as factors to calculate those stress scenarios. If a supply chain, if a commodity just disappear from a territory, if you discontinue the supply chain, what would be the cost of relocation of the supply chain, of moving cacao production from Congo because of human rights issues to Brazil, where it's safer? What would be the cost of discontinuing a production of corn and soy in the middle north of Mato Grosso because we don't have a second crop? When you start calculating that, you can start calculating the cost of opportunity for resilience. In the same way, when you talk about the nature as infrastructure, looking at all the climate extremes that we are facing, what is the cost of protecting nature, for example, in Rio Grande do Sul, to avoid another flood in Porto Alegre? What would be the cost of rebuilding the mangroves that were devastated? And what is the comparable cost to create a system of dams that hasn't worked when it was needed? So when you start seeing the disrupted scenario, the post-apocalyptic scenario, and start saying, okay, there is a cost, this is the opportunity of resilience. I think that is, we need to start putting that in our stress scenarios, because the once in a lifetime extreme event is happening once every 5 years. So there is a question of recalibrating our stressed financial models. You don't need to recreate them. You just need to understand that the probability has changed a lot and will change even more. Exactly. We just sometimes we get lost in those wonderful things and creative things, but in the end, to be successful, we need to make extremely creative and intellectually teasing discussions into very boring models. That's the way to convince investors in the financial sector. You need to be boring.
It's all about storytelling, right?
Exactly. And the storytelling is not to say what a wonderful thing sustainability is how this spreadsheet is more convincing than the other spreadsheet. It has to be boring.
There's one question there.
Yes, good afternoon. I'm Jacinda Njike, finance lead at Ambition Loop and with the Climate Champions team. Peter, you mentioned the price of carbon credits, and I know that this year COP30 carbon credits will be really featured. How do we get the price of carbon credits to be where it should be, and what do you need from the ministers and the other actors in the system to assist that transition to the right price?
I think that carbon prices are depressed right now. And even though they've increased in price by like 3x in the last 3 years, I still think they're selling below the true cost of production of quality. And I think the reason for that is that the market is completely opaque. There's no transparency whatsoever. It's not like corn or soy when you can just check a website and see like what the last trade was for, and that tells you the price. The price is, it's an over-the-counter market, right? Like our deal with Microsoft, nobody knows what the price is. It's impossible to know. And so even though we see that today the demand for carbon removal is already far in excess of the supply. For example, one customer alone, Google, needs 7 million tons of CO2 removal per year. The whole market produces less than that. Just one customer could buy the entire market. So in theory, all of the demand, all of the leverage should be in the hands of the supplier. But when you are a supplier in a negotiation one-on-one with Google, who do you think really has the leverage, right? You need them to survive. And so the most important thing that we need is for this market to develop normal infrastructure, like any other market, right? In any other market, you know the price of the good in question. In any other market, you have credit ratings that make sense. In a bond market, if you want to know how risky a bond is, you just ask Fitch or Moody's or S&P. Today, you're starting to see the emergence of B0 and Silvera. This infrastructure is starting to appear, and I am hopeful that in the near term, it will make the market more efficient. And what that's going to do is it's going to cause a repricing in the market. And the price of carbon removal credits will go up significantly. Until that happens, suppliers just need to recognize their leverage. Like one part of the way that we are able to get good prices is we don't blink. We set the price where it needs to be and we don't back down. So there's a little bit of poker required at this stage in the market. And I think other suppliers should maybe think about replicating that as well until the market finally gets more mature.
Do you mind if I'd like to put on another angle. I think there's a compliance market angle as well. If the government is involved, it has to be public, so that information's out there. And then when that happens, then you might have another proxy. So there's two sides to it.
We have time for only one more question. Is there any more? No? Okay, so I would ask each one of the panelists to say in 2 or 3 words, what would you recommend to a fund manager or a project developer for them to succeed in their journey based on the lessons you have learned?
Patient listening.
Can I use a Japanese word, Japanese concept? Wabi-sabi. Learn to embrace the beauty of imperfection. Everything is imperfect. We are imperfect. So embrace it and innovate as soon as possible. We don't have time.
I'd say transparency and trustworthiness. To what Peter was saying, we're building a market right now. So the more people hiding information, the worse it is for us to build the market.
Mine is to project developers, and it's charge the true price of your product and stand by it.
Perfect, great. A round of applause for our panelists, please.